Hi there. Another stock that many investors think will be a 10x in the next 10 years. And that is SoFi Technologies, that has a market cap around 9 billion at the current price. As you can see, the stock price has almost doubled in just a few months. If you look at the whole picture, it has declined by over 50% from its last major peak. And today, the stock price is up almost 7%. And this may continue or not. So in this video, you'll find out the outlook of SoFi and at the end its fair value, whether it's a good investment at the current price or not. So let's begin. You can see in this image the analyst estimates, revenue and earnings. Revenue is expected to increase from 1.5 billion to over 4 billion by 2026. Now SoFi is making no profits. They had a loss last year, but the market expects over 200 million in profits by 2026. So there is some growth. Now let's see more. The first quarter results, the CEO said that it's another quarter of record financial results. Strength across all their segments: lending, technology platform, and financial services. Maybe you know that SoFi is not just a bank, but also a technology company. They have a technology platform and they provide software services to other institutions, such as banks, financial companies, and others. Now, as I said, they are currently making no money. But their most important indicator is their members. They have around 5.6 million. As you can see, their users keep going up. They had a growth rate over 40% year over year. So that's great. As the US has a population over 300 million, there is a lot of room to grow. And SoFi may be a 10x if this number is growing and they become profitable. And also their Galileo accounts, these are the users for the technology platform, they reported an increase of 15% year over year. But they report this growth rate year over year to cover this decline from the last quarter, from 141 million to 126 million. It's not a major decline, but you have to be careful, because if they report a decline also in their members, I mean the bank users, then the stock price will decline a lot. So you have to be aware of this risk. Now, their products, you may know that they provide all the financial services that you need: personal loans, banking, private student loans, insurance, investing, mortgages, and others. You can also see their app. It looks like this. Now, if you look deeper into their segments, as I said, they have 3 segments: lending, financial services, and technology platform. You can see that most of the revenue comes from lending. They reported over 300 million revenue, a growth rate over 40%. For the technology platform, they made over 70 million, also growth rate over 20%. And for the financial services, 81 million, the highest growth rate, over 200%. Now, many people think that SoFi is a technology company, not a bank. But if you look at their segments, the revenue, you can see that they made only 77 million in revenue from technology platform. And from lending, they made over 300 million, plus their financial services, 81 million. So their technology doesn't represent a big part of the revenue. You have to be aware of this. And their guidance is that they expect for the full year 2023, the revenue to be around 2 billion and become profitable by the fourth quarter of 2023. As you saw the estimates, the market expects a loss of around 150 million, and for 2024 a profit. So what they expect may happen. Now, there is also risk, and that is dilution. You can see that the number of shares keep going up. They currently have over 900 million shares. For 2022 they had an increase of 14%, and for this year an increase of 0.7%. So you have to be careful, because if they issue too many shares, your value will decrease over time. They didn't issue a lot of shares, but we have to be aware of this risk, because if they do, you will lose money. Now, if you want to value this company, you can't use their earnings, but their book value. especially their price to book value ratio. As you can see at the end of 2022, the price to book value was around 0.6 and now it's around 1.5. And the best time to invest in a company is when the price to book value is below 1. So now SoFi is overvalued at the current price, $9. As I said, the price to book value is 1.5. Now you might say that they have a lot of growth ahead, as they currently have only 5.6 million users. And as the US has over 300 million people, they have a lot of room to grow. But the problem is the market thinks differently. Here you can see the book value per share, the analyst estimates. They expect the book value to be around $5 by 2026. So they expect no increase in the book value per share. And if you compare the analyst estimates with the current price, you can see that the stock price is overvalued. Now if SoFi reports a higher growth, let's say the number of users double from 5 million to 10 million, they also become profitable, they will make more than what the market expects, then SoFi may be a good investment. The market cap can go to 50 billion or even more. But be aware that there is a lot of work. It's not that easy. There is also competition and other problems. So for people who think that SoFi will be a 10x, that may happen, but there is a low probability. You have to be aware of the risk, as I said, dilution. Plus, if they report a decline in their members, I mean for the banking segment, then the stock price will decline a lot. As you can see, they already reported a decline for Galileo accounts, for their technology platform. So don't think that SoFi is a technology company and they'll have a lot of growth ahead. As I said, the revenue from technology platform is quite low compared to their lending segment and financial services. So it's up to you if you want to focus on the risk first, or you may take the risk and invest when the stock price is high. But be aware that when the stock price was around $20, many people thought that the stock price would be at 10x. But look what has happened so far, a decline of over 60%. So you want to avoid this risk, a decline in your investment. Buy low and sell when the stock price is high. It's quite easy, but it's hard to do. As you can see, the analyst expects the book value per share to be around $5. If you can buy the stock when the price is below book value, you might make some money with SoFi. But also be aware of the risk. SoFi is not a profitable bank. And if you have any questions, or if you want me to analyze something new, please let me know in the comments.